In this video, we'll be taking a look at gold, crude oil, and EUR-USD to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So without further ado, we're starting with a gold chart on a 2 hours time frame, and as you can see, we've been in this solid consolidation pattern for the past 1 month, I think. So we got to this high at 3,490 or 3,500 dollar per ounce of gold on the 22nd of April, and right now this seems to be over a month ago. So we've had 1 month to consolidate. Right now I think we are getting ready to blast through this area of consolidation for massive price movement to the upside on gold. This will give us good opportunities to go long in continuation of the bullish momentum we've seen over the past 1.5 years or so. So right now, focusing on what's going on over here, you can see that there's a clear opportunity to go long here, which is watching out to see how price opens and break out from this trend line. So my bullish case scenario will be watching out for maybe a move and a consolidation around this area of value or above the trend line, followed by a move to the upside. So this will give you a better risk to reward ratio if we do get a small consolidation before the continuation of a movement to the upside. So something like this. So entry is going to be around here after the break of a small consolidation after this trend line, with your stop loss placed underneath these price levels. Take profit target. First one can be as high as this level, and you trade the rest of the positions as you go higher. So this is my first bullish case scenario on gold. Mind you, there's a good chance we open with a gap this week because of some certain fundamentals that came up during the weekend, right? But that's still yet to be seen. So when the market opens, if we don't open up with a gap, so if we do not open up with a gap, I'm going to be watching out for that consolidation to go long. I have one position already on this trade open on Friday. I think my position was around these price levels. So I'm just going to hold that one, and if I get another opportunity to get in, I'm going to be watching out for a good consolidation above this trend line, followed by breakouts to go long in continuation of the bullish momentum we've seen on gold over the past few months, right? So that's the first bullish case scenario. Second bullish case scenario, or second trade opportunity, will be going long when the market opens. That's not ideal, so that's going to be a much more risky trade opportunity in my opinion. So going long when the market opens, if you have good balance, good risk management, if you go long when the market opens, your stop loss is going to be placed underneath this low. So if you have a good balance with a good risk to reward ratio, with a good risk management, excuse me, then this could be another opportunity for you to go long. So enter when the market opens, stop loss placed on these price levels, and take profit target remains as discussed a few minutes ago, which is 1 over here and the rest of the positions as we go higher. This is how I'm going to go long on gold. Now, where I'll start to worry or get concerned over the gold price would be if we fail to sustain a bullish momentum above this trend line, right? So if we see some sort of weakness, maybe price pops off a little like this, then dumps back and takes out this trend line, also taking out this area of value, so this lows, then this will raise some concerns for me, because then there's a good chance price comes back to these price levels, bounce, or these price levels bounce before eventually testing this trend line again and possibly breaking through, right? So this is a bearish case scenario, the neutral case scenario for me on gold. So when market opens, we may get a little pop off to the upside, followed by a rejection of that move. Then we could see price declining slowly to the downside, with these price levels acting as a short-term base or short-term support. If it doesn't hold, then I would like to believe that this trend line will be the next level, right? So if we extend this, for example, so over here we had this consolidation which broke out, sending price to this trend line, right? So if we do get a rejection or a fake out, we may see a price reversal to the downside. This area of value may try to hold up as support, but if it doesn't hold, we may get a breakout to the downside again, retesting this trend line. If this doesn't hold, then we may retest this trend line before eventually bouncing up to the outside. But I do not think this is the end of the bullish rally on gold. I just don't think so. I think there's a good chance we rally all the way up to $4,000 per ounce of gold, which is all the way at these highs over here, right? There's a good chance we rally all the way to these highs, but we're just going to chop the market as the price evolves, as price action evolves, and see how it goes. So meanwhile, if this happens over here, I wouldn't be rushing to going short, because trades could reverse at any moment at either of these area of value. So either here, either this trend line, either this other one, or even before any of the area of values, because the market has a bullish bias, because the trend is totally bullish, and fundamental around the world right now gets towards favorable conditions for gold. That's why I'm bullish. So I only look for trade opportunities to go long rather than try to short the market when you have a setup like this, right? So that's it briefly for gold. If you love this analysis, leave your thoughts in the comment section below. If you disagree with me or agree with me, also leave your thoughts in the comment section below, explaining why you disagree with me or why you agree with me. Moving on, we'll be talking about crude oil. So crude oil, briefly, we have a clear area of value over here. This is a 1 hour chart, right? So we have a clear area of value over here, which could lead to a potential bullish opportunity. So let's say price creeps all the way up into this area of value, consolidates, and gives us a bullish breakout to the upside. This may present us with a good opportunity to go long, right? But I'm skeptical about this because we're still trading underneath a long-term area of value. So underneath a long-term formerly area of support, now potentially turn into an area of resistance. So in as much as if price gets to this area of value, this area of resistance, we get a good breakout, it does signal a good opportunity to go long, but I wouldn't be going long because overall setup still looks bearish. I'm going to show you what I'm talking about in a minute. So going on to the daily time frame, for example, so just so you can see what I'm talking about. So daily time frame, you can see crude oil price created a series of lower highs, right, with this base as support level dating all the way back to August of 2021. Now we successfully broke through this price level with very good volume, trading underneath the area value. So I'm not really convinced that a breakout from our short-term area of resistance could send price higher. It could, but I'm not just going to be taking the risk of getting into this buy trades right now. I'm really looking to go short, and what will trigger my short trade opportunities is what I'm going to be explaining right now in a few minutes. So going back to the 1 hour time frame, so now we know why this area of value is important. So this big zone over here is important. I would like to believe that we will tend to see more weakness on crude oil, right? So this crude oil chart, excuse me if I've mistaken this the name of this chart for gold. So this is a crude oil chart. I do believe we are going to experience some sort of weakness, and that would mean seeing price reverse to this area of value, support level, consolidate a little, and give us a bearish breakout to the downside, right? So if you can see what I have on my screen right now, I have an alert already set. That's this dotted line you can see here. So when price breaks through this area of value, I'm going to pounce in and go short, because the setup on the daily time frame, 4 hours time frame, even a weekly time frame suggests that price should experience some extended bearish decline to the downside, right? That's the reason why I'm bearish on crude oil. And even if we get a breakout from this area of resistance, I wouldn't be going long, even though it looks good, right? That's just my belief. That's just the way I trade, right? I'd rather trade in line with the trend than trying to trade against the trend, especially when there isn't enough proof to suggest that the trend may be reversing, right? So that's it briefly for crude oil. Excuse me, once again, there's a good chance we creep up into this area of resistance, get a bullish breakout, but I wouldn't be going long just because we're still trading underneath this long-term area of value, which was a support level, now turned into a resistance. So I'm more bearish, looking for bearish opportunity, which would mean waiting for price to take this area of support for me to go short, if that happens, right? So if this happens, I'm going to go short underneath this area of support. Stop loss is going to be above the consolidation list of the breakout. Take profit target obviously is going to be around this area of support over here. So this will give me a very good risk to reward ratio of, let's see, stop loss is going to be potentially 100 to 150 pips, and take profit target is going to be approximately 450 pips. So a risk to reward ratio of 1 to 3, which sounds decent in my opinion. And lastly, we're going to be talking about EUR-USD. So EUR-USD, been following this for a while now, and I know we've talked about this over the past few weeks. Right now, we seem to be gearing up for a bullish move to the upside. So the reason why this looks bullish, or this may seem like a continuation of the trend, is if I pull up my 200 EMA and 200 SMA on the 6 hours time frame, you see something really interesting. Now you see that we had a good, very solid bounce off of the 200 EMA and SMA acting as a support level on the 6 hours time frame, which coincides with an area of value, which also coincides with the RSI getting into the oversold level. So this is just a no-brainer signal for me, suggests that bullish trend intact, we're likely going to go higher, and you can see the massive rise into the upside towards this area of value. So going back to the 1 hour time frame, now that we know that the bullish trend is likely going to be intact, now we look for opportunities to go long. So early this week, we did get this good breakout from this trend line I've been tracking for a few weeks. I didn't go long yet, but I think now we are going to be getting a good opportunity to go long if we do take out this area of resistance. So good area of resistance, and to go long, I'm going to be watching out for something like this. So more consolidation around these price levels, followed by a good breakout. So the consolidation may take a little bit of time to get formed completely, so we may not spend too much or too long around this price level before we get a breakout. When market opens, we may already even see a solid breakout on Monday. Meanwhile, if this happens, my entry is going to be above this area of resistance. Stop loss is going to be underneath the consolidation, at least a breakout, or underneath these lows. Take profit target, first one is going to be around here, while I trail the rest of my positions as we go higher. As for short trade opportunity, for those who are asking, I wouldn't be reviewing any short trade opportunity in my opinion, because I don't see any reason why you want to go short. I know some traders will likely take out this trend line like this and draw a line across like this, waiting to see if price breaks this to go short. But for me, I wouldn't be going short right now, because on a 6 hours time frame, I can see a clear signal that we're still bullish. You can see the slow grind and slow rise, creating higher highs and higher lows from these lows all the way to current price levels. That signifies bullish momentum, and I would be sticking with a bullish case scenario in on EUR-USD in my opinion, because the overall trend still looks bullish. You can see clear higher highs and clear higher lows, excuse me. That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you disagree with me, leave your thoughts also in the comment section below, explaining why. And once more, if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. That's it from me this week, guys. See you next week.